Hi there, Aaron Dunn here, providing you with an update from the federal budget, which was delivered on the 3rd of May 2016. Now, in this video, we're going to be looking at the changes that were announced around contributions. So not only our concessional contributions, but also some pretty significant changes around our non-concessional contribution cap. So the first thing here around the concessional contributions is we are going to see a change from what is the current $30,000 concessional contribution cap for individuals who are less than 49 years of age, from $30,000 down to $25,000 from 1 July 2017. And that $25,000 concessional contribution cap is going to apply to all members. So for those that currently utilise the temporary hire cap, so the $35,000 amount that exists at the moment for individuals who are 49 years or older, they are also going to see that cap reduced to a flat $25,000 from 1 July 2017. Now, the interesting thing with this, and this goes to the very heart of the equity and fairness of the rules, is that if we have someone that has under $500,000 in an account balance from 1 July 2017, what they're going to have the ability to do is to utilise any unused concessional contributions in those financial years starting from that 27-18 financial year. So if we have, for example, someone that during the 2017-2018 financial year only used $10,000 of their $25,000 cap, in that following year, assuming that they have an account balance under $500,000, they will have $40,000 available to them in that next financial year, rather than the same $25,000 cap. So again, the government is looking to bring up the ability for those individuals who may have broken work patterns in life, maybe through family or through health, whatever the case may be, to bolster their superannuation. Now, the other area that we've seen change is around what's called Division 293 tax. And Division 293 tax is effectively an additional 15% tax that applies on your concessional contributions. Now, this is like the old surcharge, and the surcharge was introduced back in 1996. And effectively what it's doing is if you currently have income in excess of $300,000, and the income calculation is very technically defined, but it's looking at what your taxable income is, adjusting for reportable fringe benefits and adding back rental losses and the like. We then need to add in your contributions, and if that income threshold currently is above $300,000, it's then those concessional contributions that you make during the year are subject to tax at an additional 15% or 30% in effect. Now, that $300,000 threshold is going to be reduced down to $250,000. So we're expecting a lot more people to be caught in the net around Division 293. There was an inference that the government was going to reduce that to $180,000, but we saw Labor previously stake their place in the ground at $250,000 as well. So I expect that this will get through, and again, that change will occur from 1 July 2017. One of the big changes here is around the introduction of a lifetime cap for your non-concessional contributions. This is a very significant change and has somewhat caught us by surprise. At the moment, you have the ability to make a $180,000 as a member contribution each and every year if you're under the age of 65. You have the ability to bring forward the next 2 years' worth of contributions if you wish, so you can do $540,000 in that 1 year, but it disallows you to make any further contributions in those following 3 years. From 7:30 on budget night, the opportunity to utilise a bring forward rule and the way we currently know non-concessional contributions has now stopped. We now have a $500,000 non-concessional limit that applies to your lifetime. And that lifetime means that we're not only looking at what happens from the 3rd of May 2016, but the government is looking at the contributions you have made since 1 July 2007. So if you have made contributions previously under the current Simpler Super rules, we need to take into account those contributions to determine whether you have any eligibility to make any further contributions into the fund. So if you've already made $200,000 worth of non-concessional contributions since, say, July of 2007 to today, you only have the difference from $500,000 to that $200,000 available left to contribute into super. But what happens if you've maybe already made $1 million worth of contributions? Do you have to pay that back? Well, no, you don't. The government assumes that you've utilised your $500,000 limit and you no longer have any further ability to make non-concessional contributions into superannuation. So it is a fundamental change, and they triggered this on budget night. Of course, we still need to receive royal assent around this legislation, but even when it does finally get legislated on the assumption that it does, it takes effect from last night. So the game has changed when it comes to non-concessional contributions. A couple of other things we've seen is, importantly, we now, in positive news, have some more flexibility around contributions and getting contributions into super. So the first thing here is that the flexibility means that individuals have the ability to make concessional pre-tax or non-concessional after-tax contributions into super right through to age 74. Now currently, between 65 to 74, you have to meet a work test to be able to get that money into superannuation. So that ability to, or that removal of the work test, makes things a lot easier to make contributions into your self-managed fund. But remembering, of course, that we have our concessional contribution limit, and then also this introduction of the non-concessional lifetime cap. Now that change is going to take effect again from 1 July 2007, so we still have this financial year and next year where any contributions by someone 65 to 74, we're going to have completed 40 hours of work within a 30-day consecutive period to enable us to make a contribution into superannuation. The other area here around the flexibility is the fact that we had this very difficult rule around what was called a 10% rule. So where the salary and wage component of your total income was less than 10% of your total income, you could make a further contribution into super and claim a tax deduction. So you're deemed to be substantially self-employed. But this posed some challenges for individuals because there were circumstances where you may be employed and you might have half your income as a salary and half your income as investment income. So you might be making salary sacrifice or just super guarantee payments on your wages, but you had no other ability to make contributions into super that you could claim a tax deduction for. So that tidies up that rule and just effectively now allows anyone and everyone to make a $25,000 concessional contribution into the fund if you want to claim a tax deduction on the amount that you make into the fund. As long as it's within that concessional limit from 1 July 2017, there's no problems with that whatsoever. And the final thing to note here is this new terminology called LISTO, and that is the introduction of what's called a low-income superannuation tax offset. Now in reality, we do have this in operation today. It was introduced under Labor, called a low-income super contribution. So where your taxable income and your super contributions are less than your adjusted taxable income, that is less than $37,000, and you make contributions into super, you would be subject to tax at 15%. Now, if you had taken that as wages, you would have been taxed on that at a lower rate than 15%. So the government is giving you back currently a contribution to effectively wipe out the contributions tax and give that contribution into super tax-free. This ultimately gives exactly the same outcome. However, it's going to be provided as a tax offset, so a non-refundable tax offset, rather than a physical payment to you. So it is fundamentally the same, but it's given some new terminology because the low-income super contribution rules were to cease at 30 June 2017. So they're the key changes that we've seen in Budget 2016. Many of these take effect from the 1st of July 2017, with the exception that our lifetime cap for non-concessional contributions kicked in on budget night, and therefore you need to be very careful in terms of any post-tax contributions that you're making to super from now on. And if you do have any questions, you can feel free to come back to us. So thank you for watching our budget update around the changes to contributions. And if you do have any questions, please feel free to reach out to us. Thank you.